Picture this. You're sitting at your kitchen table on a Sunday night, scrolling through your bank statements, and something just doesn't add up. You make decent money. You don't have kids. You don't have a spouse spending money on things you didn't agree to. You should be ahead, right? You should be building wealth faster than your married friends who are splitting their income across two people, maybe three or four if they've got kids. But somehow, every single month, you're watching your coupled-up coworkers take vacations, buy houses, and stack their retirement accounts while you're sitting there wondering why your savings rate looks like it belongs to someone making half your salary. Here's the thing. It's not your imagination, and it's definitely not because you're bad with money. There's an invisible tax on being single that almost nobody talks about, and I'm not being dramatic when I say it could be costing you hundreds of thousands of dollars over your lifetime. Not because the government is explicitly charging you more, although in some cases they literally are, but because the entire financial infrastructure of modern life was designed around the assumption that adults come in pairs. My name is James, and I spend way too much time thinking about the hidden costs that silently drain people's bank accounts while they blame themselves for not being disciplined enough. If you're someone who's single, whether by choice or circumstance, and you've ever felt like the financial deck is stacked against you in ways you can't quite articulate, hit subscribe and give this video a thumbs up. Because today we're going to put actual numbers on this thing, and I promise you, by the end of this video, you're going to look at your budget completely differently. Let's start with the most obvious one that somehow still catches people off guard: housing. The average one-bedroom apartment in the United States right now costs about $1,600 a month. In major cities, we're talking $2,500, $3,000, sometimes more. Now, your married friend who makes the exact same salary as you, they're splitting a two-bedroom with their spouse for maybe $2,000 total. That's $1,000 each. You're paying $1,600. They're paying $1,000. That's a $600 difference every single month, and you're getting less space. Run that math over a decade. $600 times 12 months times 10 years. That's $72,000. Just on rent. Just on the basic human need of having a roof over your head. And here's what most people don't realize. That $72,000 isn't just money you spent. It's money that didn't get invested. If you had put that $600 a month into an index fund averaging 7% returns over those 10 years, you'd have over $100,000. That's the real cost. Not $72,000, $100,000 plus. Now you might be thinking, okay, James, but I could just get a roommate. And sure, you could, but let's be honest about what that means. You're a 32-year-old professional sharing a bathroom with someone you found on Craigslist, because our economic system has decided that the privilege of living alone is a luxury tax. Your married coworker isn't sharing a bathroom with a stranger. They're sharing it with someone they chose to build a life with. There's a qualitative difference there that has real psychological costs, which we'll get to in a minute. But housing is just the beginning. Let's talk about health insurance. If you're getting insurance through your employer, you're probably paying somewhere between $150 and $300 a month for individual coverage. Your married coworker with the same plan? They're paying maybe $400 for a family plan that covers two people. Do the math. You're paying $300 for one person. They're paying $200 per person. You're subsidizing their coverage. And if you're self-employed or buying insurance on the marketplace, forget about it. There's no family discount for a family of one. You're paying full price for everything. According to the Kaiser Family Foundation, the average annual premium for single coverage is over $8,000. For family coverage, it's about $23,000, but that's covering multiple people. Per person, couples are almost always paying less. This is where it gets interesting, though, because the financial penalties for being single go way beyond just splitting costs. The tax code itself is structured in ways that actively punish single people. Let's talk about the standard deduction. In 2024, a single filer gets a standard deduction of $14,600. A married couple filing jointly, $29,200. Now, you might think, well, that's just double. But here's the thing. It's not just double. When you combine incomes, You often end up in a lower effective tax bracket than two single people making the same combined amount. Here's a concrete example. Say you make $80,000 a year. As a single filer, you're paying federal income taxes of about $12,000, give or take depending on your deductions. Now imagine a married couple where each spouse makes $40,000. Combined, they make the same $80,000. But because of how the brackets work for married filing jointly, they might pay only $10,000 in federal taxes. That's a $2,000 annual penalty just for being single. And this is just federal income tax. We haven't even talked about Social Security survivor benefits that married couples get and you don't. We haven't talked about the fact that you can't inherit your partner's 401k penalty-free because you don't have a partner. We haven't talked about estate taxes, gift taxes, or the countless other ways the financial system assumes and rewards couplehood. According to an analysis by The Atlantic, the lifetime cost of being single in America, when you factor in taxes, insurance, housing, and Social Security benefits, can exceed $1 million compared to a married person with similar earnings. $1 million. That's not hyperbole. That's math. Now look, I'm not telling you this to make you feel hopeless or to make you run out and marry someone for tax benefits. Please don't do that. What I'm trying to do is help you understand why your financial situation might feel harder than it should, and why comparing yourself to your married friends is comparing apples to a completely different financial reality. But here's where it gets even more insidious, and this is the part nobody talks about. Being single doesn't just cost you more money. It often costs you more time, more energy, and more mental bandwidth, all of which have financial consequences. Think about it. When you're part of a couple, you have built-in backup. Your car breaks down, your spouse can drive you to work while it's getting fixed. You get sick, someone's there to pick up groceries and make sure you eat something other than saltines. You need to be at work for an important meeting, but there's a plumber coming? Your partner can stay home. When you're single, every single logistics problem is your problem alone. You have to take time off work for every appointment, every repair person, every emergency. You can't divide and conquer household tasks. If the dishes don't get done, they don't get done. There's no one to pick up the slack when you're exhausted or overwhelmed. This might sound like a lifestyle complaint, but it has real financial implications. Studies show that single people report higher levels of stress and time poverty than their married counterparts. And stress doesn't just feel bad. It leads to worse financial decisions. When you're exhausted and overwhelmed, you're more likely to order takeout instead of cooking. You're more likely to pay for convenience. You're more likely to miss a bill payment because you forgot and there was no one to remind you. A study from the Journal of Consumer Research found that stressed individuals make more impulsive purchases and are less likely to comparison shop. That stress tax adds up. We're talking potentially thousands of dollars a year in suboptimal financial decisions driven by the cognitive load of managing your entire life alone. Now you might be thinking, James, this all sounds like you're saying I should just get married. No, that's not what I'm saying at all. What I'm saying is that you need to stop blaming yourself for not being further ahead financially and start adjusting your expectations and strategies to match your actual reality. The financial advice industry loves to pretend that everyone starts from the same position, that if you just make your coffee at home and cancel your subscriptions, you'll be a millionaire by 40. But that advice ignores the structural realities of who's actually penalized by our economic system. So let's talk about what you can actually do about it. First, and I cannot stress this enough, you need to adjust your financial benchmarks. Stop comparing your savings rate to your married friends. They're playing a different game with different rules. Compare yourself to other single people at your income level, or better yet, just compare yourself to yourself 6 months ago. Are you making progress? That's what matters. Second, be ruthlessly strategic about housing. This is probably the single biggest lever you can pull. If you're in a high cost of living area and you're able to work remotely, seriously consider moving somewhere cheaper. The difference between paying $2,500 a month in San Francisco and paying $1,200 in Austin or Raleigh or Boise is almost $16,000 a year. over a decade, invested. That's life-changing money. If you can't move, consider house hacking. Buy a duplex, live in one unit, rent out the other. Yes, it requires a down payment. Yes, it's complicated. But it fundamentally changes the math on housing from something that drains your wealth to something that builds it. Third, maximize your tax-advantaged accounts aggressively. Since the tax code is already working against you, use every legal tool available to minimize what you owe. Max out your 401k. Max out your IRA or Roth IRA, depending on your situation. Look into HSAs if you have a high-deductible health plan. These accounts don't just reduce your taxable income. They let your money compound tax-free for decades. Fourth, build your own support network intentionally. This isn't just emotional advice, it's financial advice. Having people you can rely on, friends who will pick you up when your car breaks down, neighbors who will accept packages, colleagues who will cover for you in a pinch, these relationships reduce the hidden costs of being single. They're social infrastructure that saves you money and stress. Fifth, automate everything you possibly can. When you're the only person managing your finances, you need systems that don't rely on your memory or willpower. Automatic transfers to savings and investment accounts, automatic bill payments, automatic rebalancing in your portfolio. Remove yourself as the bottleneck wherever possible. Sixth, and this is counterintuitive, don't be afraid to spend money on things that buy you time or reduce your stress. I know the standard financial advice is to cut, cut, cut. But if paying for a house cleaner twice a month frees up mental energy that lets you focus on your career or avoid burnout, that's a valid financial decision. If paying for grocery delivery saves you 2 hours of shopping and helps you actually cook instead of ordering Uber Eats, the math might work out in your favor. Single people often try to do everything themselves because they feel like they should be able to, and they end up burned out and making worse financial decisions as a result. Here's the thing about the single tax. It's real and it's significant, but it's not insurmountable. Plenty of single people build wealth and achieve financial independence, but they do it by acknowledging the structural disadvantages they face and strategizing around them, not by pretending those disadvantages don't exist and wondering why the standard advice isn't working. The financial content you see online is mostly created by people who don't have to think about this stuff. They've got a partner to split the rent with, someone to watch the kids while they record videos, a second income that lets them take risks with their primary one. They're not lying to you, but they're often giving advice from a position they don't even realize is privileged. You're not behind because you're bad with money. You're not struggling because you lack discipline. You're navigating a system that assumes you come as a pair and charges you a premium when you don't. The median American household income is about $75,000, but a single-person household and a two-person household making that same amount are living fundamentally different financial lives. You're not imagining that it's harder. It is harder. The question is what you're going to do about it. Here's what I want you to take away from this video. First, know the size of the problem. If you're single, you're probably paying somewhere between $5,000 and $15,000 a year more than you would as part of a couple, depending on where you live and what your situation is. That's real money that you need to account for in your planning. Second, stop comparing yourself to couples. It's not apples to apples. Their financial situation is structurally different from yours, and comparing yourself to them will only make you feel like a failure when you're actually doing fine given your circumstances. Third, focus on the levers you can actually pull. Housing, taxes, automation, support networks. These are the areas where you can make the biggest impact on your situation. And finally, remember that being single is not a temporary condition you need to escape. Some people are single by choice. Some are single because of circumstance. Either way, you deserve a financial strategy that works for your actual life, not the life that society assumes you should have. The invisible tax is real, but now you can see it. And once you can see it, you can start working around it. If this video was useful, do me a favor. Share it with a single friend who might need to hear this. Hit the subscribe button if you want more videos that tell you the truth about money instead of just repeating the same tired advice. And drop a comment below telling me what hidden cost of being single surprised you the most. I'll see you in the next one.